All right, so if you're looking at the market right now and feeling just a little bit confused, you are definitely not alone. I mean, what is going on? You've got stocks hitting new highs, but then you look over at crypto and it's in this deep, painful correction. Gold is surging, but it's not for the usual inflation reasons. It really feels like every part of the financial world is telling a completely different story. So let's try to make sense of all this noise. We're going to break it down into the three big stories that are driving, well, pretty much everything.
What we're seeing is that the old playbooks, all those historical correlations we used to rely on, they're just not holding up. It's like we're in what one analyst calls a new paradigm, where you've got precious metals surging at the exact same time as risk-on stuff like the Russell 2000. It's a really blurry macro picture, and that is exactly why we have to look past the surface-level numbers and really understand the powerful stories happening underneath.
And this just perfectly illustrates the confusion, right? On one hand, you've got the S&P 500 climbing again, showing some incredible resilience. But on the other hand, you've got Bitcoin just kind of hovering near these key support levels, and a whole lot of altcoins are hitting new yearly lows. They're literally moving in opposite directions. So what gives? Let's start with the story that's propping up the entire equity market.
So story number one, and you could argue it's the most powerful narrative out there right now, is the AI revolution. And listen, this isn't just about stocks going up. It's a really forward-looking story about a fundamental technological shift that is really truly just getting started.
I absolutely love this quote from Dan Ives because it frames the AI boom perfectly. This isn't some late-stage 1999-style bubble we're in. We are in year 3 of what's expected to be an 8 to 10-year build-out. So even though it might feel like we've seen this massive run-up, the reality is we are still in the very early innings of this whole transformation. The party is just getting warmed up.
And here is the fuel for that party. We're talking about a staggering $3 to $4 trillion. That's what's projected to be spent on tech and data center infrastructure over just the next few years. Now, to put that number into perspective, because it's a huge number, more money is going to be spent in the next 2 years on this stuff than in the last 8 years combined. That is an absolutely unbelievable wave of capital about to hit. And this slide right here shows you exactly why all that capital is flowing so freely. I mean, despite all the hype, all the headlines, we are less than 3% penetrated in the US and less than 1% penetrated globally when it comes to the AI revolution. This isn't just a growth story. It's a story about a massive, untapped frontier that has investors totally convinced the runway is immense.
Okay, so here's the crucial point. We've got the capital. We've got the demand. We have the use cases. But there is one massive, real-world constraint that could slow this whole thing down. What is the one resource that this digital revolution absolutely cannot live without?
It's energy. The current power grid as it stands simply cannot handle the demand. Analysts are projecting that by the time AI penetration hits just 20% among US companies, we will run out of energy. The grid will be so strained that new data centers coming online could literally cause the lights to go out in people's homes. And this, right here, is why nuclear energy is so rapidly emerging as the only viable long-term solution to power this whole build-out.
Okay, let's switch gears. While AI is this big story about the future, our second story is unfolding right now in the present. It's all about a massive shift in global liquidity that is making waves across every single asset class out there.
Now, to understand this story, you really have to know about the yen carry trade. I know it sounds complex, but it's basically been a free money glitch for decades. Big investors borrow Japanese yen for practically nothing, convert it into dollars, and then go buy assets like tech stocks or even Bitcoin that offer a much higher return. This trade, it's estimated to be worth up to 4 times trillion dollars, and it has been a huge source of liquidity for global markets for a long, long time.
But that free money glitch is ending. Japan is starting to raise its interest rates. And this slide shows you exactly what happens when they do. The correlation here is just brutal. When the Bank of Japan hiked rates back in March of 2024, Bitcoin fell 23%. When they hiked again in July, it fell 26%. As this massive trade unwinds, liquidity gets sucked out of risk assets, and crypto is very often the first to feel that pain.
And at the exact same time all of this is happening, we're seeing a massive flight to safety, and the destination is gold. Central banks, especially in the BRICS countries, started hoarding it after the US weaponized the dollar against Russia. Then you add in all the uncertainty from global tariffs and just general geopolitical instability, and you have a perfect storm. Gold isn't acting as an inflation hedge right now. It's acting as an instability hedge.
And the result of all that has been absolutely historic.
Gold's price has effectively doubled since the start of 2024. This isn't just some minor move. It is a powerful signal that the major players on the world stage are fundamentally reevaluating their relationship with the dollar and are desperately seeking a safe haven from all this global uncertainty.
And that brings us to our third and final story, the world of crypto itself. It's being pulled between that global liquidity drain on one side and its own internal dynamics on the other. The digital asset space is telling a story of fear, of reevaluation, and a really critical divergence.
Right now, the dominant emotion in crypto is just fear. The Crypto Fear and Greed Index recently plummeted to a score of 16, which is deep, deep into extreme fear. This reflects thinning liquidity, widespread panic, and traders just pulling back as we head into the end of the year. The short-term sentiment is, without a doubt, bearish.
You know, volatile periods like this are really a testing ground. They shake out the short-term speculators, the ones who are driven by that emotional roller coaster of FOMO, fear of missing out, and FUD, fear, uncertainty, and doubt. The alternative approach is what you'd call stewardship, which is built on financial literacy and discipline, viewing these market dips not as disasters, but as data points.
And this right here is the crucial counter-narrative to all that fear. While the short-term traders are panicking, Bitcoin's long-term integration into the traditional system is quietly accelerating. As Peter McCormack puts it, Bitcoin's tentacles are everywhere. Through ETFs, pension funds, index trackers, people are becoming Bitcoin holders without even realizing it. This is deep, systemic adoption happening just below the surface.
And on a technical level, we're seeing a really clear split. Bitcoin and Ethereum, the two biggest assets, are managing to hold above these critical support levels. But as you move farther out on the risk curve, many altcoins are just breaking down and hitting new yearly lows. This shows a flight to relative safety even within the crypto market itself, as capital consolidates into the established leaders. So, what do we have? We have three very different, and at times, totally contradictory, stories all happening at once. How in the world do we put them together to navigate this chaotic landscape?
Well, here's a pretty simple framework. The AI story is the powerful long-term tailwind, and it's primarily lifting tech equities. The money story is the immediate headwind, as the end of cheap money in Japan and that global flight to gold drains liquidity from risk assets. And the crypto story is about an asset class that's got right in the middle, facing all this short-term fear while its long-term adoption just continues to grow.
So, what are the crucial points to take away from all this? First, today's markets are being driven by these powerful competing narratives, not just by numbers on a screen. Second, the AI revolution is absolutely real, but it faces a very real bottleneck in energy. Third, the shifting dynamics of global currencies are a major force impacting every single asset you own. And finally, crypto is at an inflection point, balancing this extreme short-term fear with a quiet long-term systemic integration. And this leaves us with a final, really fascinating question. As these powerful stories all compete for capital and for conviction, which one do you believe will ultimately win out? Will it be the promise of a technological revolution, the hard reality of global money flows, or the disruptive potential of a whole new financial system? The answer to that will likely define the next decade of investing.